Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Though for the markets, it's not been a great day coming in, given the fact that we have slipped from the day's high for the benchmark indices. A tad bit of small sort of a recovery coming in for Nifty Bank, but really a tad bit and a small recovery that is seen in Nifty Bank. But hopefully we will be able to build on to it, and maybe we should, or we will try and touch that positive territory. But for now, the market breadth is also totally caved in. Mid-cap, small-cap index, that's where the pressure is way much more than the rest of the market. In fact, mid-cap 100 index is down about 10% from September's record high level as well. So broader markets are the one where the carnage is much more deeper when you compare it to the benchmark indices. But with that, let's kickstart taking all of your stock-related query. Remember, viewers, that this is a show where we get you answers for all of your stock-related queries. Today, it being Friday, is the techie special on Buy Now, Sell Now. You can write to us on the WhatsApp number that is flashing on your screen. Do remember, each time you write to us, mention your name, the stocks that you're looking to invest in, mention that name as well. And if you already bought into the stock, mention the buy price, the time horizon, as well as a quantity. Our experts will be able to help you better. And talking about our techie special and our technical guest today, we have Kunal Bothra, who's joining us on technicals, as well as Rajesh Bhosale, technical analyst at Angel One, who's joining us on the show. Very good morning to you, gentlemen. Thank you so much for joining us on the show. And also very good morning to you, Rajesh. I believe it's the first time that you've been part of Buy Now, Sell Now, so welcome aboard. Let's kickstart taking your queries then. And the first query that I have is coming in from Vinod. He's writing to us from Gurgaon. He has 600 shares of Zomato at a price of 116 rupees per share, as well as Indus Towers at about 226 rupees per share. He wants to know at what levels can he add some more in his portfolio for the longer term. Kunal, what's your take for Zomato as well as Indus Towers? And do you think Indus Towers is a bet that you can keep with you for the longer term?
See, for the long term, I think Indus Tower is very attractive, but it's just that the behavior of the stock is very, very volatile. That's the only nature of the stock, which you have to adjust towards. And we've seen historically that when stocks are very volatile and they are high, they're considered to be high beta. It's always better to have a prudent allocation towards those names. You have to try and reduce the allocations. What you do on an average for the low to moderate beta kind of a stocks. Zomato, on the other hand, again, a stock which has done exceptionally well from 40-45. The stock at one point was trading or cruising about the 300 levels. It's gone through almost like a 15 to 17% correction so far from its 300 plus highs, but I believe that maybe closer to 235 to 40, we can find some strong supports into the stock price. So a buy on dips starting from current levels is what I would advise for Zomato. And for Indus Tower, you can look to buy on dips, but keep a slightly lower allocation in terms of position sizing.
All right, so that's the take coming in on Indus Towers. But the next query that I have is coming in on KPIT Tech. And Kunal, sorry, but let me take it from you itself, because this one is specifically for you, wherein a viewer, actually he didn't share his name, but he's holding 40 shares of KPIT Tech. Average price is 1670 rupees. He's at a loss right now, but good time to average this particular stock?
Well, it looks like that it's a good time to average, but I just wait for maybe 1 or 2 days more. The reason why I would believe so is because this stock seems to be an outlier as compared to the other mid-cap IT names, where we've seen many of the mid-cap IT stocks, Forge, Persistent, etc. These stocks have been making new highs and then growing to a breakout mode. And it's just that in the last 4 or 5 days, we've seen the stock falling sharply, KPIT Tech particularly. So I would believe that maybe over the next couple of days, you might see a bottom in place, but wait out for a confirmation. If the stock holds on to say 1300 levels broadly on closing basis, then I would believe that we could be in a process of the stock forming a bottom, and then buying the stock at lower levels to try and reduce the cost price could be a better strategy.
All right, this one is coming from Kaushik Mitra. This one is for you, Rajesh. He wants to know about the right price to go ahead and add Vedanta. He already is holding Vedanta in his portfolio at a price of around 325 rupees per share.
Good morning, and thank you for having me on your show. So yes, definitely Vedanta, if you see, is one of the outperformers from the metal space. It has corrected along with the broader market. If you see, the next support for Vedanta is somewhere around 440 levels, where we can see 889 EMA. Also, during the August month, the stock had rallied from the 440 levels. So 440 is the level where I would like to accumulate, considering a longer term horizon. On the higher side, if you see, once the stocks start rising, 500 and 520 would be the immediate target levels.
All right, then that's the take coming in on Vedanta. Moving on to the next query, and this one is coming from Indu and Rajesh. She wants a view and help related to two counters. Firstly is NIIT Limited as well as Neogen Chemicals. In both of these stocks, she's been holding them with a loss of 7 to 10%. What to do in this one? Hold, exit, or add?
See, if we see the chart of NIIT Limited, the stock had a sharp rally during the August month from the levels of around 110 to 200. Now we are seeing a price correction that is along with the broader market weakness. So somewhere around 130, 140 is a strong support zone. Can continue to hold on to it. Once the market start rebounding, this stock is likely to outperform. 130, 140 is the next support to watch out, and 175, 180 is the near-term resistance for the stock. Can you repeat the second name?
Yes, the one was NIIT Limited and the other one was Neogen Chemicals.
So if you see Neogen Chemical, it has been trading in a range for last few sessions, and it is forming a base on the 50-day EMA. So as of now, can continue to hold with 1150 to, I'm sorry, this is Neogen 1253. I'm not able to see the symbol with Neogen Chem.
No problem. We'll just slip into a break, Rajesh, and maybe once when we are in break, if you can spot that chart for Neogen Chemicals. But on that note, we slip into a break, and when we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back to Buy Now, Sell Now. Let's keep it going with all your stock related queries then. And Rajesh, believe that you can now share your take on Neogen Chemicals. The stock is close to around 1855 rupees. So any take on this one, Rajesh?
Yes, before break we were discussing Neogen, and now we are talking on Neogen, which is currently quoting around 1885. So if you see the weekly chart of Neogen, it had given a double bottom breakout in the month of August and September around the levels of 1880. And after a strong run towards the 2400, we are seeing price correction along with the broader markets. But now I'm thinking that the stock is approaching its key support of 50-day EMA, that is somewhere around 1800, 750. So one can hold on to it. And I expect as the market rebounds, this stock is is likely to be one of the outperformer, because this correction has been with low volume, can continue to hold with 1750 as a stop loss. And once the stock start bouncing, the 2100, 2250 will be the near-term targets.
All right, this next query is coming from Satya, writing to us from Trichur, and Satya is a regular viewer of our show, and he's asked a very pertinent question. Kunal, he's saying, why are there no Diwali picks this year? But here's a quick note for all of our viewers. Come next week, you will have a dedicated show where you will have our technical guests as well as fundamental guests who will actually give out their recommendations of companies which they think are safe bets for the longer term, which are the high risky bets, or the ones that you need to keep in your portfolio and forget. So that show will be at 1:30 p.m. Each day next week, as well as we will be having a special segment on Buy Now, Sell Now known as Deal or No Deal at 11:30 p.m. 11:30 a.m. So you can tune in and you will get all your Diwali picks there. So let me take what his query is right now. He wants to know about DCB Bank, Rajesh, and he wants to know whether he can add right now.
So DCB Bank, if you see currently, it is up by 4% in today's session, despite that market is under pressure. So I mean, it has corrected a bit from the higher levels. But if he gets a dip around 108, 105 levels, so somewhere positive divergence is visible on the chart. So he can buy around 105, 103 levels. And on the higher side, the target should be around 120 to 125 levels.
All right, so that's the take coming in on DCB Bank. But the next query that I have is from Venkat Ramani, and Kunal, if you can guide him on Bharat Forge, because he's been holding 250 shares. His buy price is 1535 rupees. What to do in this one? His holding period is for the next 18 months.
See, I believe there could be a possibility of a further leg of correction for Bharat Forge. The only good part about the correction which has happened for Bharat Forge is that the correction has been very slow paced and not high paced as compared to many of the other peers, as well as the rest of the markets in the mid caps and tier to large cap names. So I think in that sense, maybe the stock would just about gradually come back into a grinding mode. The longer term charts still indicate that maybe there could be a potential that the stock may correct towards 1300, 1320 mark. So which means there could be another 5%, 7% correction in the offing. It depends on the overall market conditions also, and with the way the liquidity sell-off is happening across from the FIIs, there could be a possibility that even this stock may drift a bit more further on the downside. So I would suggest to just wait and watch as of now. But then if the selling gets arrested at 1300 levels, that could be a very good time where you can look to average further.
Alright, so that's the take coming in on Bharat Forge. This one is coming from Mithilesh Kumar Kunal, who is a senior citizen, and he has 3 stocks that he's looking to buy for the longer term, and he wants to know whether they are good stocks to buy and is it the right time to buy. One is Jio Finance, the other one is Bajaj Housing Finance, and the next one is Varun Beverages. I'm unsure if you can give a take on Bajaj Housing, but what about Jio Finance and Varun Beverages?
See, I think both these charts are very attractive. Now, yes, in the recent sell-off, many of these charts would have probably dampened on the shorter term time scale. But when we look at this on the longer term charts, they still look fairly attractive. Varun Beverages closer to 600 mark. In fact, very recently, I think last week or so, or maybe a few days back, the stock had shown a very strong up move from 500, 50, 60 levels to almost 630, 635 mark, and that generally is a indication of the kind of quality and the strength of the stock on the long term charts. Jio Finance also, I think we've seen what the stock has done. From those 200, 205 odd levels, I think that was the low the stock had made a few months back, towards the point when the stock was almost at 350, 370 levels. So again, a quality name in that sense. I would suggest to hold on to both of these stocks. In case if you're looking to buy, you can start buying at current levels. This could be a very good time where you could look to start building portfolios from a long term play, but buy on dips and buy in a staggered manner is what I would suggest as a strategy.
All right, that's the take on all of these stocks. But the next query, Rajesh, is on Bank of Maharashtra, wherein Srinivasan has bought these shares at a price of 15 rupees. What to do in this one, hold or sell?
Bank of Maharashtra has seen a sharp sell-off in last couple of months, and PSU Bank has been an underperformer from the banking space. From current level as well, we see further weakness. Possibly, the stock is headed towards
Recording stopped.
43 to 42 levels. So I would suggest to avoid Bank of Maharashtra. But if possible, he can switch to other frontline counters like Bank of Baroda, State Bank. If you see the comparative chart of these two, they have performed well in the recent terms. So if he wants to keep in PSU banks, so Bank of Baroda and State Bank would be the 2 names I would suggest.
That's a take coming on Bank of Maharashtra. Kunal, a quick view coming in for IndusInd Bank, because that one is under pressure on back of the earnings. So what should viewers do? Because I'm sure people will get concerned because of the earnings, but we will in a short while get you the clarification coming from the management as well. But what's your take on the charts?
Yeah, it looks like that the stock is extremely oversold, but then I'll wait out for a point when the stock crosses 1100 mark. Only that could be a point where short-term traders could look at start to play for a contra buy on IndusInd Bank. But I think till the time the stock remains and sustains below the 1100 levels, it's going to be a bit more tricky and difficult for the stock to get into a very immediate recovery.
Alright, so 1100 levels is where one should look at adding actually IndusInd Bank as a contra buy, you were saying, right?
Yes, only on the way of once the stock bounces back,
okay,
only about those levels.
All right, and as promised, here's Sumant Katpalia, the MD and CEO of IndusInd Bank, saying that fundamentally there's nothing wrong with the bank's balance sheet. These added that it was prudent to create a contingency provision. Listen in.
Stability of the balance sheet and the prudence is much more important at this point of time than just showing growth. We want to show growth, but we want to be cautiously optimistic in showing our growth. There is fundamentally nothing wrong with the balance sheet and our growth. I was saying stress emerging in microfinance, and it's reflected in our results. And I thought it's very prudent right now to create a contingency provision and keep it aside. You may not require it, you may not use it, but it's prudent that having a contingency provision and keeping it aside for bad times is a very, very good way of running a bank which has a cyclical portfolios of like ours. And I think getting a 2.2% of a book from of loans as provisions is a very, very conservative view to take on the balance sheet.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries then. This one is coming in from Nitin. He's writing to us from Maharashtra. He wants to know, Kunal, whether he should buy, there's a list of stocks, CDSL, Hindalco, Cholamandalam or SRF. He's already holding these counters in his portfolio and he's holding them with a small loss. So which one do you think that he should add some more? Which of the stock do you think he should add some more in his portfolio?
See, I think CDSL is a good buy. That's a chart which has done reasonably well. Hindalco, I think, is a very good longer term stock. But my only concern is with the news flows surrounding and even surrounding the commodity prices, which could be a lot more volatile. The stock also comes from the metal sector, which inherently is a very high beta space or a high beta sector as such. So these are the two names which you can look out for. SRF, the only concern for the stock is that the chemical sector overall has been on and off in terms of price recovery, and SRF has apparently been one of the underperformers from the entire specialty chemicals pack. So I think in that sense I would probably believe that maybe skipping SRF for now could be a better strategy. But for the other two stocks also, I would not suggest a buy on an immediate basis, because the correction in the markets what you're seeing right now could probably see more legs, maybe more delayed legs going forward. So I think try and have a staggered approach over here. You can start maybe with 1/4 of the quantity which you are looking to buy at current levels, but then buy on dips is a better strategy.
All right, that's the take coming in on these exchange-related counters. We're moving on to the next stock. Next query rather is coming in from Vidya, and Rajesh, let me take it from you because Vidya is saying that she just started investing in the stock markets 2 years back, and now when she looks at her portfolio, it's down about 20% odd. But given the kind of fall in the markets, will it be wise to go ahead and make such fresh investments? Any pockets or any stocks that you can highlight at this price point where she can go and invest for a long term, maybe for the 5 years? So this query is being posted by Vidya, but I take it that given the fall in the markets, a lot of our viewers would like to know what to do next and what should be the strategy.
Yes, definitely. If we see from a long-term perspective, this fall is an opportunity. And in fact, if we see further any correction, one should look to buy quality proposition in a staggered manner. So somewhere around 23,900, 24,000, we see a strong support for the market where we had seen August a base formation. So from there, we can start looking to buy. So if we see in the current fall, the IT and pharma, they have played a defensive role and they haven't fallen that much as compared to other sectors. So if we see counters like Tech Mahindra, then if we see TCS, then from pharma space, if we see Sun Pharma, Cipla, so these are the counters which will be a safe bet. And once the market starts rebounding, they might be the one who can outperform. So IT and pharma are the two space which I think will outperform in the near term and can invest in them in the staggered manner.
IT and pharma are the ones that are likely to outperform in the near term and can look at these spaces in a staggered manner. But let's talk about Escorts Kubota. Kunal, do you think it's a good buy after massive correction that it has actually seen from those elevated levels? This query is coming from Venu, who's a senior citizen.
See, the parameter which I'm looking out for is that many of these stocks, especially on the auto pack, they've gone through a very sharp correction. Now, the concern for Escorts Kubota, when I look at the charts, is on the weekly basis where the stock has formed a double top formation. So on the weekly closing basis, 43.30, 34 approximately is the closing high for the stock, and it's broken below the major support of 3700 for Escorts, which means we could be looking at maybe a 500 to 600 point drop into the stock. So it's already corrected towards 3,300 so far, but there could be a possibility of another 200 to 50 odd points correction. So again, a very similar kind of a strategy is what I would advise, what I was mentioning earlier, that if you're looking to buy, then buy from a staggered approach, maybe starting at 3,300, 350 levels, and then wait out for maybe another 100 to 200 points dip, and look to keep adding on every 200 points dip for the stock.
All right, so that's the day coming in on Escorts Kubota. But the next query is on one of the other result candidates, and that is Dixon Tech. And today the stock has fallen drastically in today's trading session. And Rajesh Krishnan wants to know your take on this one. He has bought the shares at a price of 14,000 rupees, but he does have a medium-term view on this one. What to do in this one, and can he go ahead to average any levels for that?
So if you see the charts of Dixon Tech, so it was one of the outperformers. In fact, it was trading at all-time high still yesterday, but along with the results, the stock has seen a sharp correction of more than 11% for now. So definitely the short-term momentum is down, and we may see a further leg of downside. But if we consider a higher time frame, like if we consider for a 6 to 8 months, any dip towards 12,500 would be a buying opportunity, can look to average there. From a short term, we can expect some further leg of downside, but from a high time frame, the stock continues to look positive.
So that's the take coming in on Dixon Tech. Let's take the next query, and the next query is coming in from Deepak, writing to us from Chennai. Kunal, he has L&T in his portfolio at a price of 3,825 rupees per share. He wants to know whether he should go ahead and average this one right now.
Well, on a normal corrective phase, I would probably have suggested to average L&T. But the only reason why I would probably suggest to just wait out for some more time is because the correction in the last 20-25 days, what has happened for the markets, I think has been led primarily by large cap names like L&T and Reliance Industries. So maybe there could be a point where the correction could get a bit more extreme into these stocks first, and only once we see a stronger indication that these stocks have formed a bottom after a sharp correction, when these stocks stabilize, get back into a trading range, volumes start increasing on the upside, when the stock closes with a green candle or a positive day, I think only on those points is where you could look to start entering. So of course it's a very strong quality name, must be a part of your longer term portfolio, but it's just that the last 20 days of correction which has happened for the stock has probably dampened the short term outlook. So maybe another 100 to 100 points correction is what we can expect for L&T over the near term. But I think from those levels of maybe 3,100 approximately is where you can look to start buying.
All right, that's the take coming in on L&T. But the next query, Rajesh, is on Canara Bank, wherein Gopal is holding 4,000 shares. His buy price is 118 rupees. What to do in this one? Can he go ahead and add more?
So yes, Canara Bank has seen a sharp sell-off in last couple of months. We just discussed that PSU bankings are underperformance, and we expect that this stock can see further correction, possibly towards 87 to 86 level. This is a long-term weekly EMA, 89 EMA. So that is likely to act as a support, because in the past as well, we have seen that 89 weekly moving average has acted as a support. So somewhere around 88, he can add some quantity around here with a stop loss somewhere around 82 levels. Having said that, we don't expect a major outperformance from this counter. Possibly on a bounce back, 108, 110 would be the resistance level.
All right, so that's the take coming in on Canara Bank. Let me take this next query. It's coming in from Karthikeyan. Kunal, he wants to know if it's the right time to enter Mahindra right now.
Well, not a right time to enter the stock, but a very good stock to look at from a quality long-term play. Now, the only reason why is because in every market correction, there are of course standout performers which could be much stronger as compared to how the entire sector has panned out. For example, in the last 20-25 days, one and a half odd month, we've seen the auto stocks correcting by I think 12% to 14% approximately, or slightly more than that, looking at today's correction also. But I think M&M has been one of the standout performers in that sense. So maybe the stock could probably correct a bit more, try and get back into the line of underperformance, or the correction which is at par with the sector, but maybe closer to the 200-day moving average at 2500 mark or thereabouts could be a very good level to buy the stock. So it's a good quality name, but then buy on dips at especially closer to the 200 DMA could be a better strategy.
All right, that's the take on M&M. But Kunal, once again coming to you because Arvind Reddy wants your take on KIMS. He's holding 100 shares, buy price is 510 rupees. How is the technical setup looking like?
So, so far the stock which has done reasonably well, I think from 200 to 50 levels, the stock went up to almost 550, 560 thereabouts, till last few weeks back. But then one word of advice is that in such a kind of a market, it is always better to try and have less number of stocks which are considered to be very high beta, because in the first phase of the market correction or in the mid phase of the market correction, it's the high beta stocks, the mid caps and small caps, which see the maximum pain, then followed by maybe a few more selling which happens into these mid cap, small caps, and then last selling which happens into the large cap names. So I believe in that sense you could probably just about try to avoid buying into the stock as of now. Let's just wait out for that phase where the market correction ends. Maybe you might get the stock much cheaper from current levels, say closer to 450, 400 levels also.
Alright, so that's the take coming in on KIMS, and also you have Arvind Reddy, Kunal say that he's indebted to you for Anantraj stock because he is definitely a regular viewer, because that was one of the picks coming in from Kunal, I believe either on the Diwali or actually
2 Diwalis back when it
two
was 100.
Diwalis back, 2 Diwalis back. And yes, like I said, viewers, stay tuned because come next week, Kunal will share with us some more of his top bets for the new Samvat. But for that, you have to tune in next week at 11 a.m. But for now, we are goodbye, Rajesh as well as Kunal. Thank you so much for joining, and we are out of time on this edition of Buy Now Sell Now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.